oil prices are down again this morning, trading around $34 a barrel, and that, of course, came after the U.S. announced a travel ban from Europe over the coronavirus pandemic, and that's in addition to the crisis already caused by Saudi Arabia's escalated price war with Russia. Well, a research analyst at the financial derivatives company, Temitope Olugbile, joins me now to look at the implication of all of this on the domestic commodities markets. Good morning, Temitope.
Good morning.
All right, so talk us through some of the burning economic issues we have there, apart from the oil price war, of course, and how it's affecting the Nigerian economy.
Okay, so I think the major burning issue remains the COVID-19 outbreak and, the rapid spread and the impact it's having on various sectors and, globally and domestic-wise. So we see that, WHO yesterday announced that it has officially declared it to be a pandemic. It went from being an epidemic that just originated from China, spread to some Asian countries, but now it's a pandemic that has spread across, in fact, I think literally all the continents. We have that, and now we woke up to the news of the U.S. Banning European flights into the U.S. We saw that the effect that had on, global stocks, and, the COVID-19 is having an effect on various sectors: aviation, tourism, hospitality, even sports. So we see that, and if you put things in context, it's having basically a three-dimension impact on, the global economy, and even here in Nigeria, it's having the health implications, it's having the trade implications, Nigeria's trade with these Asian countries. It's also having the oil price implication, and that has also triggered a price war, which the UAE has now been roped into, promising higher than expected output come April. So we're seeing all these ripple effects of this one outbreak on, the various economies. Coming home to Nigeria, we're seeing that, even in Nigeria, there's a lot of panic. There's speculative buying. Investors are looking to store value. They're not looking to, have their monies in very risky assets. That's why you see the stock market crashing, all bleeding red. Here in NSC, over in the US also, we have, gold being a safe haven asset. You have that also. There's an increased demand for that. You have the Naira. People are panic buying at the Forex market. It's now as high as 375 Naira for a dollar at the parallel market. And even at that, there's a lot of rationing or hoarding, if you will. So, there's all of that implications on the domestic economy too. And, there's a lot of responses. We've seen the Bank of England having to do an emergency meeting and, cut rates. We've seen, even here in Nigeria, we've seen, fiscal and monetary authorities, trying to look for the appropriate and adequate stimulus needed to fight this battle. Yes.
Now, talking about the Bank of England cutting interest rates now, of course, looking at data from the NBS yesterday showing that the UK emerged the country of origin with the highest amount of capital importation into Nigeria. What implication will this rate cut have on doing business with Nigeria? Okay,
I think, the rate cut was as a result of something, which, like I said before, is the COVID-19. So it's a multi-dimension, implications and ripple effects we're going to see. With the rate cut, with the COVID-19, the impact is having on businesses. The Bank of England also had to, pump in some funds, to the small companies and, even to the banks to, just as a side of the only relief we can get in a really troubling climb and everything. So we have that, all of this would have an impact on the amount we're going to be getting from these countries. The European region is really affected by this outbreak, and definitely we're going to see an impact on remittance flows and even, just money that comes in, capital inflows into the country. And like I said, people are looking to store value. Nigeria already is a risky country. We've seen all these downgrades and everything. So it's not a good time, really. And if, as an investor, you wouldn't be looking to put your money into a risky asset and a risky country. It's not advisable.
You talked about the currencies markets. Now, of course, there's already a scarcity of dollar, which has led to panic buying. We saw the Naira depreciate to as low as 375 to the dollar. So how are we going to deal with this?
So yes, it's there. It's a lot for the fiscal and monetary team to chew, and there are different options available to them. There's the option of doing nothing, just waiting to see where this all leads to. There's the option of doing the wrong thing. You're doing something, but it's not what you need to be doing. There's also the option of doing the right thing, but it's not adequate in an inadequate proportion. You could do the right thing in an adequate proportion. So, Nigerians are waiting to see, the central bank and, the fiscal authorities have promised, some stimulus package, which we should be expecting to be announced soon. We're just waiting to see the appropriate and adequate response to all of this. There's also talks of, the devaluation. There are all kinds of options available to, the policymakers, but, we just want it to be adequate and appropriate at a time like this. That's what they need to do.
So once again, the issue of devaluation is coming into play here.
It's what people, it's what I think is what is even triggering the, the panic buying at the forex market. An adjustment is an option. An adjustment of any kind. It can be an adjustment in terms of devaluation. It can be an adjustment in another. An adjustment is definitely something that they need to do. Voluntary or involuntary, an adjustment needs to happen, because when you cut your revenue, your oil revenue is going to be significantly affected. How else do we have forex? What is the major earner of forex earnings in Nigeria? Is oil. It remains oil. So when that is cut by more than 50%, definitely an adjustment has to happen. How they're going to do that adjustment and in what tools they're going to use remains up to the policymakers.
So the World Health Organization has declared the COVID-19 a pandemic, but you have a slide which is talking about a pandemic versus epidemic. What exactly are you saying here? Okay,
so basically, it's like I said, the coronavirus started as an epidemic. Basically, it was just spreading. It was a rapid, it was a new disease, a novel virus that was originated from China. Caused some scare in China. It was situated in China alone, then it started spreading to other Asian countries. And with the pandemic now, with WHO declaring it a pandemic, what they're trying to say basically is it is a disease that is spreading rapidly. It relates to the rapid spread, right? And they didn't. You see that WHO is not a fan of declaring diseases. They don't often declare diseases quickly as a pandemic. You saw that with the SARS disease. They didn't declare that as a pandemic. But I think because of the rapid spread, it just speaks to the spread, and that's what the different countries are trying to contain. They're trying. That's why the US is banning flights, just to keep it localized. If you can keep it localized in these countries that are already affected, that you would start to see the slowdown of new cases. But as long as it continues to spread, it will remain a pandemic.
Oh, well, aside from what the US has done now regarding travel ban from Europe over the coronavirus,
yes,
when are we likely to see an end to this oil price crisis? Of course, especially looking at the war with Saudi Arabia, and of course the UAE has been roped into it now.
Yeah, so the oil, with everything we had going on with the COVID-19, we didn't need this battle for market share between these major oil producers. Now you see that the UAE and Saudi are they're doing some kind of collaboration and agreeing together to pump in oil come April, and Russia is already under some pressure, and it's really a battle for market share. It's really a Saudi is relying on the fact that its cost of oil production is lower than Russia's own. Russia is not wanting to encourage the US shale having to pump in more oil. So Russia is really battling for market share, and it's really just some can call it an ego battle basically. And the end of this would depend on these countries realizing that this COVID-19 it should trump this battle for market share. It should be the focus, and it was the focus initially until it became an ego battle. So I think the end would be the countries coming together and agreeing together, even if it's just until the COVID-19 scare becomes a thing of the past, then they can go back to their battle share. But for now, the important thing is dealing with the COVID-19 impact on oil. And you want oil. All of these countries, the thing is, there's no winning party in this battle. Every single one of them are going to be affected significantly by lower prices. Yesterday we were celebrating 37, we're getting to 37, but now we're back down to 34 because of just the announcement of UAE. So, the markets are very volatile. Any little announcement right now is having a more than expected reaction. So these countries just need to do away with this battle and realize the greater impact it's having on all countries, them included.
Well, while we hope that they do that, what implication will all this have on the domestic commodities market?
Okay, so yes, let's take, for example, the travel, the travel restrictions and everything we're seeing. We saw that, even Turkish Airlines have banned, flights, in going to Turkey. And we see that all of these flight disruptions, it's going to have an impact on commodities. Let's take Turkey, for example. You know, there's a lot of non-food items that are imported from Turkey into Nigeria. So if you're saying, you know, importers can't, you know, bring in goods, you know, cargo movement is also affected. We've seen the traffic to Asia seriously affected. Traffic to the US will now be affected by these US restrictions. You're left with what, European traffic. And so it's just, you know, the bringing in of these goods. And if there's supply shortages, then, you know, you're going to have a higher than expected inflation impact, right? Because you already have the domestic supply shortages in terms of, you know, the border closure. Now you're having the imported, you know, the supply shortages, and that would just really manifest in your inflation figures, yes.
Thanks, Temitope. Temitope Oluwile is one of the research analysts at the Financial Derivatives Company. Thanks for coming on the program.
Thank you for having me.